Good evening, everyone, and welcome to tonight's webinar where we will be looking at how to invest in UK property from Ireland. So I've spoken with quite a few of you already this week, which has been brilliant. Some of you have already reserved apartments with us. So welcome to any of our existing buyers and clients, and then of course a big welcome to all of the new clients who have joined this evening as well. I can see that we've got lots of you on from Ireland, which is what we love to see. So we want to get the most out of the session, guys. We'll try and keep it as compact as possible with as much information as we can. There is going to be a live Q&A at the end, so please do have some questions ready for us. You can pop those in throughout as well. You might see that if you scroll to the bottom of your screens, there's a Q&A box. But on certain systems with Zoom, you have to drop down from the more button. That's also at the bottom. So yeah, it should be in there. So firstly, just to introduce myself, I'm Hannah Delaney. I'm UK Sales Manager here at Joseph Mews. Been in the property industry for just over 10 years now, with the majority of that being in sort of off-plan and investment, some estate agency, lettings, etc. So yeah, my passion is helping you all with your property goals and ultimately building that wealth through property. And then I've also got our managing partner on with me this evening, Andrew Segal, who I will introduce you to formally shortly. Okay, so a little brief here for you on Joseph Mews. So we were founded by the gentleman you can see on screen here, who is Andy Foote. Andy's a portfolio landlord himself. He owns multiple apartments here in Birmingham, but he started with his first purchase being in Spain. So that's an apartment that he still owns now. It's always done really, really well for Andy. However, his big issue with the purchase was that customer service side of things. He received, no guidance, no support. There was just a phone call out the blue one day to say that the apartment's going to be ready in a matter of weeks. So from there, he's kind of left to frantically run around sorting finances and mortgages and flights over there. Didn't even know where to collect keys from. And the one thing that I always sort of take from that was that as a result of having that poor customer service, this apartment then remained vacant for a few months initially, just because he wasn't prepared. And that resulted in a big loss on what should have been a great return on Andy's investment. So with that, he had the idea to start the business we have today. So founded the company in the early 2000s. We were previously part of the Seven Capital Group, and then we rebranded as Joseph Mews around 5 years ago, just so that we had the opportunity to partner with different developers to offer our clients a more diverse option. So instead of being able to just sell our own product, we now exclusively collaborate with award-winning developers and partners, and that enables us to offer you a variety of property in those key areas across the UK. So here is a brief overview of our performance to date. The figures on screen, they really do speak for themselves. Statistics that we are so proud of. So we've marketed, sold and delivered well over 4,000 units across 43 developments in total, delivering an overall GDV of over £430 million. I always say the figure that I think sort of speaks volumes here and that I feel most proud of is that nearly 30% of our clients repeat purchase with us. So it just demonstrates the service that we provide, as well as that sort of high return investment that we offer. This here is our sort of customer journey. So this is a really important part of the webinar. Of course, when you're considering your next investment and your next purchase, it's got to be the right thing overall. However, just as important as that is that partner that you purchase through, especially taking somebody like Andy's experience into account, for example, it can have a huge effect on your overall return. Purchasing through an agent or a company who just don't provide that support and don't have that track record with their customer service and the customer journey. So this here is an overview of what we offer, and I would just like to mention that we don't charge for this service. A lot of our clients, when I go through what we offer, they always sort of say, how much does it cost? So just to make it very clear, we don't charge you. We provide all of the educational support, the start to end service at no additional cost. We're not an estate agent, so we don't just sell you that product for you to never hear from us again. We really do see you through that whole journey. So each of these touch points on screen are done with us and our whole team here at Joseph Mews. And our goal really, we want to partner with you. And essentially, we want to come on that journey with you. So we find that perfect property. We'll go through, what developments are going to suit your requirements, what unit's going to be best for you. We take you right through to exchange. So with that, we introduce you to partners, solicitors. The exchange process typically takes around 28 days, give or take. And then once you've exchanged, we take you right through to completion with full build updates and plenty of notice for obviously when your completion is going to take place along the way. And then we work with you to get your finances ready so we can introduce you to mortgage brokers. We can furnish the apartments for you, make the introductions to letting agents. I mean, we can even deliver your keys to the letting agent if you want us to. We sell to clients all over the world. A lot of those clients have never even seen their apartments in person, so we've done everything for them. So you don't need to be making hundreds of calls and doing all this chasing with different companies, as that's what we're here for. So we then kind of go through to handover with you, and we ensure with multiple sort of snagging appointments that when you receive your apartment, sorry, it's fully ready to be occupied, and then we start getting that rental return for you then immediately. Just again, just sort of here, just adding to the last slide, we're more than just a property promoter. We do work with third-party estate agents, and they just introduce clients to us. However, we directly and exclusively partner with these award-winning developers, as I said previously, but we also partner with you. So they love us because we take all of that customer service off their hands and they can just crack on and build. And then you love us because, you've got us behind you. You're not left in the dark. We're doing all of the chasing and the running around for you. And then you've got the security of having you there, supporting you through the entire journey. Okay, so that is about all for now from us. So we're going to move on to the property side. So I'll formally introduce you to Andrew Segal, and he'll start with the next part for you. Evening, Andrew.
Evening, Han. Thanks for that. Very good. Thanks everyone for joining. Got good numbers on tonight, so appreciate that. As I say, we're trying to make it as concise and as informative as possible. We'll have the Q&A at the end, so keep those coming in. And there'll be a chance at the very end. You can tick a box if you want myself, Han, Beth, Luke, Ollie, one of the team to contact you. If you've already been working with Hannah or one of the team, we'll make sure that introduction's the same. So you've got that continuation of service. And as Hannah said, one of the most sort of questions we get asked is really about the mortgage size. So I'd say probably about 89% of our clients have mortgages wherever you are in the world. Doesn't matter if you're a foreign person living in, we've got Australians, Chinese, everywhere from the world, we can get you a mortgage 99 times out of 100. But part of our sort of consultancy approach is, before you make any commitment, the easy bit working with us is choosing the property because we help you and guide through that. You've got to pay for it, and we work with you to do all the rest. So it really is a sort of a combined effort. And yes, we have landlords that, we built up massive portfolios, anything from 5 to 100 properties. But 60% of our clients are sort of first-time investors. So it doesn't matter if you're a multi-billionaire or if it's all your life savings or your first investment, we're there and we can support you in-house. We've got our own customer care, delivery team, furnishing teams. We work with third parties, so I think that's important. So thanks for that, Han. It's interesting, and we've got product which we'll talk about that's off plan, could be 18 months away, and some stuff that will be ready sort of now, really. So there's different options depending on what you're looking to achieve. Okay, talking about that, we always like to get on to know our clients, and we say, what's your primary objective when it comes to property investment? Is it capital growth? Yeah, so you're looking, to increase your wealth over a period of time. Is it purely rental income? As you'll see in a minute, even if you don't want capital growth, you get capital growth just because of how strong the market is. But again, it might be we put you in a different location or a different development if capital appreciation is slightly more important than rental income, or vice versa. Or are you retirement planning, which most people are? Of course, we all know what property prices have done, and I'll come onto the market in a minute. Or is it, generational wealth? Are you building wealth for your children and your children's children? And then we have a lot of clients doing that. Most of our investors, about 60%, and don't ever sell their property. It goes to the next generation and the next generation, and of course, it's increasing in price, and we'll see what that is. And it's from day one is giving a good rental yield. So we like to understand what your goals and objectives are, work with you just to get the most out of it. And I'll show you what we mean by that as we go through the presentation. If I have the next slide, please, Ham. Thank you. We always, the biggest thing we see, and I'm a lot older than Hannah, I've been many more decades than I care to remember in property. Started with my dad when I was 19. Mum's 90, dad's 93. We're still investing. We're still buying stuff today. And the biggest problem is just not making a decision. And we'll come on to how that can impact you in a minute. But when we ask people what's the biggest fears, and again, we do lots of reviews and ask people what their thoughts are. And people are worried about potential changes in government regulation and taxes. Again, that's something that we have to put up with. Rachel Reeves, of course, whether it's Labour, Conservative, or whoever, there's increases in taxes, but it's still, and we'll come on to some figures, but it's still very, very profitable. And there's things you can do as well by structuring it in like a limited company, which isn't as scary as it sounds, very easy to do. And that can help with things like inheritance tax, capital gains. And if you're drawing dividends out, you can draw money out of the investment in a more tax efficient way. But as I say, when we look at the supply and demand dynamics and the mathematics, we'll see that, yes, it happens. Yes, we've got to pay taxes. Yes, things change. But, I think it's probably a good sign if we're getting taxed on it, because it means the government knows it's profitable, although we'd rather not get taxed. But we'll come on to some figures in a minute. Interest rates is an existing one affecting mortgage affordability. Obviously, when I first bought some back in the 70s, when I bought property, the interest rates were sort of 15%. Obviously, as we know, they've come down to record lows, and now they're around sort of base rates about 3.5%. The mortgage brokers, the banks, expect those mortgage rates to come down. And again, even I bought stuff recently, and believe it or not, we can get you guys maybe 3 or 4% interest rates. I've got stuff just because I've got a lot of property and my personal circumstances. I've been paying 7% for a mortgage, and I'm only just kind of breaking even on the rent. It doesn't matter. That particular property is up for renewal 26th of April, and I've now got a 3.5-4% mortgage rate, but it's gone up 35,000 in those 2 years. So there was the capital appreciation play. So again, we can help with independent, regulated third-party advice with partners we've been working with, in some cases for decades, to help you understand what your mortgage rates will be. And then that allows us to do things like cash flow summaries. So we can see exactly, gross doesn't matter if it's being rented out for £2,000 a month, it doesn't really mean anything. What's your net, your mortgage, any other charges, any fees? So we can work with you so you can see exactly where you are. So there's no surprises. So you can see you're going to be cash flow positive from month one from the rental point of view. And then, of course, you've got your capital appreciation. Difficulty finding suitable tenants and managing voids. Again, we work with brokers for 10, 20 years, managing agents, sorry. And because they like us, they know our stock, and we're in the best investment areas in the UK, they give reduced rates for managing your property for you. And they'll do all the tenant sourcing, credit checking, etc. Voids, I get asked about a lot. Voids is it empty? Well, Andy, we mentioned our chairman, he's had property in Birmingham for 25, 30 years. So that's across COVID, Trump, Truss, Brexit, recessions. Out of all those properties, the worst void he's ever had is 2 weeks. So, and we'll see some of the supply and demand dynamics that are making a huge impact in the property market today. Um, and is there any unexpected maintenance costs and repairs? Well, predominantly with the apartments, and that's the bulk of what we do, you have a small sort of service charge, and that's like a sinking fund. So there's no surprises because you know you're paying X amount per month or every 6 months or every 12 months, and that's like a sinking fund. So if in 10 years down the road it needs a new lick of paint, or the residents decide they want to update the gym equipment, whatever it happens to be, that fund is already there and managed sensibly. So you're not crazy increases. And all those things like the service charge, all of that we factor into our cash flow. So as I say, you can see where you are on a daily, weekly, monthly basis. If I can next slide, please, Han. Thank you. So why choose UK property? I don't know how many of you guys have invested in the UK already, but the UK is the most invested property market in the world. We have offices in different parts of the world. We don't sell property in those areas, but it's to support investors investing back into the UK. And we work with agents as well who, through us, support those clients. And it's English law, very clear, very understandable. The law's on your side. And I like this saying, capital goes where the rules are clear, clear English law. Demand is deep. I'll come on to that. And time does the heavy lifting. It's what we call an armchair investment. So you buy the property, we do everything with you or for you in terms of that ongoing management, and you just let it cook, sit back, and away you go. And it is as simple as that with the right partners and the right companies in place. Next slide, please, Han. This is one of my favorites because I was buying property. Dad bought his first property in 1960, paid £1,900 for it. So my first apartment in the UK was £19,000. So you can see we got there from 77 on average, every 10 to 13 years, property prices double. Now, people try and what we call guess the market. Oh, we think there's going to be a crash. There never has been. I'll come on to the peak and the trough in a second. But as you can see, the property prices are steadily increasing. Even with Brexit, Trump, Truss, wars, we all know what's going on in the world. It's, as far as I'm concerned, a safe haven. I bought at the top of the market there. So you can see where it says 100% growth over 14 years, 2007, 2008, we had the recession. Yes, as you can see, prices only dipped in certain areas, not much, 5, 6, 7%. I suppose it's quite a lot in the overall scheme of things. However, I bought property right at the top of the market. And I've got friends, obviously, and a lot of investors, and they're all laughing at me. But guess what? I've still got that property. The tenants didn't leave. I still paid the mortgage. And that property is now 3 times what I paid for it. And that was 2008. So again, it's about, we're not going to make you a millionaire in a week or a month or a year. It's a minimum of a 5-year hold, really. If you buy today and you need to sell tomorrow, obviously we can do that. But you want to be looking at a sort of 5-year period. And it's all to do, as we'll see, with supply and demand, which is, I've never known the supply so limited and the demand so high. Average age of the first time buyer in the UK is 38 years old. Yes, for financial reasons, of course, but also lifestyle choices. We rent our music, we rent our cars, we do our videos. So it's a kind of, as we know, the world's changing fast. It's a new world out there. So many, 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 many more people going into rented accommodation and a hugely limited supply. And next slide, please, Han. Thank you. Now, we're all investors, or certainly we are on our side, and we deal with thousands of investors and thousands of apartments. But what's always quite nice is the world's largest institutional investors are moving into UK property. So what they're doing, you're buying 1 or 2 or 3 or 4 properties, which is fantastic. It's the way to build generational wealth. Um, Blackstone, Legal and General, Lloyds Bank, they are building or buying whole developments. So you might be buying one or two, they'll be buying a whole block of flats, 10, 20, 30, 40, 50, 100 apartments. They're not selling those, they're keeping them and renting them out because they know, and these guys spend, they're multi-billion pound companies, they're spending millions on research. So they look at the best areas that will give their shareholders the best return. And they can invest in anything. They invest in all sorts of assets. The bulk of their assets are property. I think it's 80% of the world's millionaires and billionaires made their money initially through property. So I think we all know it's good, but when you see these massive institutions with their billions moving in, it's great. And again, there's a shortage, so they're not squeezing us out of the market. Far from it, because there's not a lot of stuff they can buy because of that limited supply. If I can, next slide, please, Han. So I met with BlackRock. They were looking for blocks, and I think what's important there, they've got worldwide in property 400 billion, not million, 400 billion of property assets under management. They're coming into the UK. Why? World's biggest investor, BlackRock, on an asset buying spree in undervalued UK. We'll have a look at some figures in a minute, and we can see where we've seen where the price has been. We can see where we, and more importantly, all the institutions and the PLCs see that price increase. You see the price rise, which is what we want, of course, as investors. If I can, next slide, please, Ham. See what we've got. And again, our main head office is in Birmingham, and probably a third of what we've delivered has been in Birmingham. We work in other areas as well, as you'll see. The King Crown Estate is investing in Birmingham, and this is billions. And I'll pick on Birmingham in a minute, and we'll explain why that is. Massive, massive, massive regeneration, tens of billions going in, second biggest city, etc., etc. So it's super. So I think when the King is investing, and again, you can imagine the investors they've got. He's partnering with Lend-Lease, Lend-Lease, which is a massive Australian company, and they're buying up land again to build houses on. So they're doing that, what BlackRock, Lloyds Bank, and others are doing as well. So I think it signals how the UK property market is going. Next slide, please. Again, crisis. Before Christmas, we were seeing in some areas 25 tenants viewing one house. I'm sure you guys have seen it in Ireland. You know what the property market's like over there in any sort of, what I call sophisticated sort of first world country. It's all about supply and demand. I don't need to tell you what rents are doing. Don't need to tell you what property prices are doing. It's, I think, pretty straightforward. Government will never build. Labour said they want to build 1.5 million homes a year. Does the next slide show us how many they've actually done, Han? Yeah, here we go. So Labour said they want to build 1.5 million homes a year. It's never happened. Look, in the 70s, we only ever built 400,000, and you can see housing stock, new builders declined. I think one of the reasons why the big funds are in, because they're in it for the long haul, is the cost of land obviously is expensive, and the cost of materials and the cost of buildings going up. So we're seeing, even though Labour want more new homes, we're seeing less because of that labour cost, materials cost. So it's not ideal if you're a first-time buyer, but it's fantastic for us as investors. As I say, I've never known supply so limited. Areas we work with the council, so we know what planning applications are in, and half of those don't get through anyway. And even if they did, still not going to touch the side. So it's perfect. And even if Labour got anywhere close to the 1.5 million, they won't. No one will. There would still be decades of undersupply. Again, people are living longer. People are splitting up, unfortunately. So with one house now, you need 2 flats or 2 apartments. So it's not just one of those things. It's all those elements that make it, the perfect storm and a perfect place to invest. If I go to the next slide, please, Han. Thank you. So investment ticks all the right boxes, what we call the trifecta. So you've got growth, as we've seen, prices have gone up and they will go up. Mark my words. We can see that. You've got income, so you've got a monthly income from the rent, and it's hard currency. It's a nice tangible asset. It's a built-in hedge against currency, inflation, and political risk. As I say, I can remember, Brexit nightmare. Again, nothing happened. People still need somewhere to live at the end of the day. Whatever happens, you still got to, unless it's catastrophic, you're going to still need somewhere to live. And with all different, northern, southern, obviously, Northern Ireland, we've got tax treaties for different territories. So wherever you're based, you're only paying tax once. We can help with tax because it might be good, depending on your personal circumstance, to structure in a limited company, particularly if you're looking at generational wealth. If you're looking at pulling out money, it can be more tax efficient. It can be protected from capital gains and inheritance tax. So there's quite a lot of advantage. And everyone's different situation is slightly different because if you're not, for example, if you're not paying tax in the UK, you've got your £12,000 tax-free allowance. So that might mean you may not want to go into a limited company, or you may want to, but it would be financially advisable not to do that. So again, we can help at a high level, and then we've got people that can talk it in more detail and understand your personal circumstances. Again, tax advantages, UK limited company. So again, doesn't matter where you're based in the world. Some countries we struggle with mortgage, but Europe, Ireland, America, yeah, it's not a problem. So you don't have to be a resident. You don't have to be living in the UK. So nice. I don't really diversify anything. All my money is in property, but if you've got stocks and shares and pension, it's a nice diversification, and it's a legacy asset. It's again, particularly in a limited company structure, you can leave it to children or the dog's home, whatever you want to do. Next slide, please, Han. Thanks. So we see hundreds of thousands of clients over the years. Obviously, a lot don't invest for whatever reason, but I always say, we'll look at some figures in a minute. But wealth isn't built by savings alone. I think we'll see on the next slide. It's built by owning assets, and we all know property prices go up. You've got the rental yield. What's not to like? If I go to the next slide, please. Okay, so hopefully, I just want to try and keep it simple. Hopefully, I will. And you can always put in the Q&As if I haven't explained it. We do have very detailed cash flow summaries on the apartments and developments we're working with. But let's just say you're lucky enough to £100,000 cash in the bank. Let's say you're getting 4.5% interest. You've got no leverage, so you can't borrow and increase that like you can with a mortgage. And I'll show you on the right-hand side of the slide what that means. No leverage, no borrowing. It's compounded annually. So you think after 10 years, happy days, I'll put 100 grand in. I've got 155 out. I've made £55,000, which sounds okay. No income, and it's capital only. Now, you don't have to buy two properties, but if you put that £100,000, you could use that as deposit on two UK properties. In the UK, you get a 75% loan to value. So it's a 75% mortgage. You're putting in 25%. So if you looked at two apartments, the total at 200,000 each, so the total property value is £400,000. You've put in £50,000 each, so you've got a £300,000 mortgage. You put in 25%, you're borrowing 75%. So total mortgage is 300,000. Now your net, what you're going to receive at the end of the day, week, month, year on those two properties is £10,000. So you're already £10,000 a year. 5 years you've overtaken the £55,000 easily on the 100,000 in the bank. It gets better, of course. You've got the capital appreciation. I'll come on to some of the reports in a second. So your 10-year capital appreciation, conservatively, is £280,000. So your £300,000 mortgage, your portfolio value after 10 years is £680,000. So it's gone from 400 to 680. You've made £280,000, and you've had you've had £108,000 rental income over that period. And also, as we'll see, talked about property prices going up. And again, I'm sure it's the same all over the world. So it's the same in Ireland. Seeing very big increases in the rents again because of the supply and demand. People not getting more mortgages, as I said earlier, for lifestyle choices and financial reasons. So again, it's fairly sort of just a basic example, but real and true. And this is the crux. This is what property investment is all about. Next slide, please, Han. Um, yeah, it's a bit confusing. We'll lose that one. What that let's go to the next one. What that one is really saying, which I probably could have mentioned on the other side, even if those figures that we put that we saw on the right hand side, even if they're wrong by 50%, you're still a lot better off. And again, it's easy to justify those figures looking at history and looking at future predictions, which we'll do in a minute. So I mentioned earlier they've got an exit strategy. So what a lot of investors do, when we mentioned, or Hannah mentioned, 28% of our clients will keep the property. It'll grow in price. It's doubling every 10 years. Maybe after 5 years, they'll pull out enough for another 25% deposit and go again. So you can refinance that asset, remortgage, pull out that cash and use that as the 25% mortgage deposit and start again. You can sell it, you can move into it, you can hold it. So it's a nice, tangible, fairly liquid asset. So as I say, if you bought today and something happened and you think, oh my God, I need to sell it tomorrow, then we'll do that. We can manage the exit strategy for you. And as I say, the real risk isn't that it underperforms slightly. The real risk is keeping your cash in the bank. And we haven't even talked about inflation at whatever it is at the moment. So that 100 grand going to 155,000 with inflation, it's not buying you anything more anyway. So you're losing out there in your real spending power. Next slide, please, Han. Okay, so as I said, it's good to understand the mechanics, mortgages, everything we do with you or for you, with in-house or through trusted third parties. As Han said, we don't charge for any of our services, and where there are charges, things like a third-party letting and management agent or a mortgage introducer with fees, because we do volume and they're good people, the discounts and the savings are passed on to yourselves. So let's have a look at some key areas of where to invest in 2026. Next slide, please, Han. There's a lot to look at, and I'll come on to why it's important to look at details and why 0.5% or a 1% increase in rental yield or capital appreciation can make quite a lot of difference. But the areas we develop in, we look for things like connectivity. I'll pick on Birmingham because it's a strong story. New trams, high-speed train, which we'll come on to, massive infrastructure project, airports to 70 carriers to 130, 140 local destinations. So perfect. And that connectivity is improving with the tram increase and high-speed train. Future developments, it's good to see, as we do, what's happening in planning. There's not really much planned for Birmingham. There's a couple of these big build-to-rent developers coming in, but they're only doing hundreds of units, not the 1,000 that are required. But future development is more about, in Birmingham, you've got HSBC have left London, half of their business. PricewaterhouseCoopers, Goldman Sachs, BT have got 4,000 people. HMRC, Deutsche Bank are there. It's just massive regeneration on the commercial side, which of course is creating more jobs. I mentioned regeneration and local economic factors. We've got tens of billions of infrastructure, and I'll point out some of them in a second, which is phenomenal, and that's really changing the face of Birmingham. I mentioned the institutions are coming in, jobs and market trends. You've got 5 of the top 12 universities in Birmingham. 49% of those graduates stay on. It's the highest earning per capita outside of London. You've got a lot of people on over £100,000 plus, because in Birmingham, our market is that young city centre for the tenants, is the young city centre professional that's earning that's 26 to sort of 36 years old. So that's that we, I suppose occasionally we'll get students, but it's that young professional market. We've got developments which we'll touch on briefly that are more market, and we've got sort of commercial letting specialists. So we get the high ends in. You have to spend a little bit more on the furniture, but your yields are incrementally higher in terms of what you're spending on the furniture. So you're getting higher returns, and that's where we come in with the advice. And again, I can bore you with the planning stats, but we're just not in Birmingham and all the areas we're in, the Derbys, the Leeds, even Manchester. You're just not enough homes being built. So perfect storm, really. Next slide, please, Han. So we're kind of data driven. We have one person in house that does research, but we partner particularly in the Midlands and globally, actually, with the JLLs, the Savills, and the Knight Franks, and they're all predicting, and they're all normally spot on, and they all not always agree with each other, but they're all agreeing here. And roughly in the UK, if you look at that top box, you've got a 19.9% capital appreciation from the end of 2025 to 2029. So you've got, if you look at Birmingham, you've got a 4.4% per annum increase, it's 24%, Bristol 19%, and so on. You can see the figures. So again, we develop in a lot of those areas. And it's the same in the box below, which is the rental growth. So again, you can see rents are increasing year on year. Now, in Birmingham, in Leeds, in Derby, we've seen more like 5, 6, 7% increases. So I'm quite happy with those figures because it's moving in the right directions. I still think they'll be higher than that, but hey, doesn't matter. The rents are high and they're going to be increasing anyway. And there's, again, tons of reports out there, which we've got, which you can download from your JLLs, your Savills, and your Knight Frank that go into a lot more detail. But obviously on tonight's webinar, I just wanted to give you a flavour of what's happening out there, and more importantly, what the PLCs think. JLL, a $23 billion company. They, sell land, commercial estates. They do infrastructure, rail, road, hotels. So great companies to leverage off their research, which is what we do. Next slide, please, Han. So we talked about, why don't I just stick a pin in a map and we'll have everything, because Andrew says, we've seen it does, property prices are doubling every 10, 12, 13 years. So yeah, we can do that. But with a bit more work or working with us and leverage we've got guides on all the areas we invest in. Because, you've got Birmingham giving you 24%, and you've got maybe Leeds, we do something in Leeds, predicted 20%. So bear in mind, we want to make it the investment as unemotional as possible. Doesn't really matter where it is, whether you live next door to it or whether it's on the moon. It's managed. You don't care as long as it's being looked after properly and it's being rented out. So let's look at the maths. So we just want to go for the areas that are going to give us the best capital appreciation and the best rental yields. And particularly more so for our overseas investors, and by that I mean Americans, Chinese, wherever, not necessarily Europe. Everyone thinks, oh yeah, UK, it's got to be London, which is fine if you've got the money and if you want it as what I call a trophy asset, or if you want to live in it and use it, fantastic, nothing wrong with London. However, average price in the key areas in the centre of London, average property price is £673,000. And you're getting a 3.82% rental yield and only a 13-14% predicted capital appreciation. We've got apartments in Derby from 152,000. You can see the average there is 199, and we're getting a 7% average. So with our stock, we're even beating what the average yields are, which I think you probably expect. So again, it's all about working with us, being guided by us, and maybe doing a bit of research yourself and looking upon it from a maths point of view. I've got inherited really sort of studios, and people go, oh my God, studios, don't want studios. No, it's because you imagine you living in a studio and you don't want to live in a studio because you've got a nice house or a nice apartment. But it's cheap to buy, cheap to run for a tenant coming in, and the market at that lower end, up to sort of 300,000, 400,000, is phenomenal. So, you got to work with your head, not with your heart. And that's really important when it comes to the sort of the mathematical side of things. Next slide, please, Han. Again, this kind of what we want to do is we want to be top left. So we want our cake and eat it. We want the lowest property price with the greatest capital appreciation with the highest rental yields. And that just means going further north. Your Manchesters, your Derbys, your Birminghams, your Leeds, possibly Leicester and Liverpool. Maybe I'd say certainly not London because you're just not getting the figures. So it's pretty scientific-ish and pretty sort of mathematical based, really. Next slide, please, Han. Okay, so let's have a look again. Just we're not going to spend too much on the actual investment opportunities, but I want to talk to you about the areas. And again, we've talked about it, but Birmingham, you've got all these corporates moving in. You've got tens and tens, 27 billion, sorry, tens of billions of investment. And in Birmingham, there's a lot that's happened. So it's not our pipe dream, it'll never get built. There's a lot happened, there's a lot happening, and there's a lot more to come. Again, good property prices, good rental yield, good price prediction, as we've seen. And even now, London is the number one location, or Birmingham's the number one location for people relocating from London because of all the corporations there. And that's only a tip of the iceberg. They got Jaguar Land Rover, the manufacturing, Gymshark on the clothing, all the tech and IT companies. You've got 9 Michelin star restaurants. You've got the Formula One sim. They're one of the first ones in Europe, certainly in the UK. And Birmingham's got the biggest regeneration plan of any city, not in the UK, in Europe. And yet, I'm sure you guys have heard of HS2, the high-speed train. Yes, it was 58 billion. I'm sure it will be double that. Yes, it will be late, but it's 50, 60% built. We see it when we go, up and down on the train. And that's going to make a massive difference because you're, instead of an hour and 21 minutes, you're 49 minutes direct to London. Whatever you think about the investment politics behind it, it's going to make a huge difference to Birmingham city centre. So all these, what I call bits of the jigsaw, are important and make everything work, if you like, as an investment. Next slide, please, Han. Again, 27 billion project. And all these, everything that's on that picture, the grid there, is up and running. So it's not a pipe dream. If I go top left, that's Selfridges. So you've got the second biggest shopping centre in the UK by footfall, by volume. That's up and running now. So you've got the artist's impression of Grand Central Station. So yes, you've got the new high-speed train. There's 130 odd trains now a day between Birmingham and London. That's the new Grand Central Station. Probably about 2015, 2016, that's what I call the start of the regeneration. Right-hand side, you've got the largest library in Europe and the largest cultural space in Europe, right in the heart of the city. Very modern. You've got the mix of the modern and the new architecture, which I personally like. Middle, bottom left, it's an artist's impression, but that's live now. 17 office blocks. That's where PwC are. All the massive corporates are leaving London for just basically saving a lot of money, and the headcount. It's cheaper to run a business from Birmingham than it is from London, as you might imagine. In the centre, they've got the HS2 terminal that's under construction as we speak. There's 10,000 jobs already in the city centre on that, and that will grow. On the right-hand side, that's HSBC's new headquarters. That's been up and running for a couple of years. New tram, bottom left, is being extended. You've got Smithfield Market, which I'll come into in a minute, middle bottom. That's another £3-4 billion project, which is it's the old fruit and veg wholesale market. They've moved them out of town because it's right in the city. That's where King Charles is. Part of the investment is. And then on the right-hand side, you've got Snow Hill Wharf, recently built, largest speculative commercial development in Europe, in the UK, sorry, and it's all tenanted and all rented out already. So yeah, it's attracting a lot of investment, a lot of businesses, again, which is what we want to see as investors. Next slide, please, Han. I mentioned the area where King Charles is investing. You've got multi-billionaire Tom Brady. He's bought Birmingham City, which is great for the city itself. But there's tons of regeneration going on in that area. Three billion investment. So he's acquired land. So it's a multi-use stadium. It'll be another area for concerts, public realm, shops, bars, restaurants. So it's kind of another city within the city, really, on what was the old rundown area, wholesale market. So again, it's just another bit of icing on the cake, really, that really is putting Birmingham on the world map from that point of view. And next slide, please, Han. I'll just touch on a mindful. What time is it? Okay, yeah. So we've done about 45 minutes. I won't keep you guys too long, but just touch on a couple of developments. You can find out more after. We can talk to you about anything afterwards. But 30 St Paul's, our office is in St Paul's Square. The developer is called Elevate. Their office is on the square, and the development is on St Paul's Square. This is a lovely period residence. In fact, it's got the old bit on the right and the new bit on the left. Beautiful. We've kept the facades, obviously all brand new build behind. I think we started from about 260, aren't we there, Han? 260, 265 at the moment with a one bed. So
Yeah. Sorry, I was on mute.
that's all right.
Yeah,
It's
two
got
six five, lowest price
yeah,
one bed. Yeah.
and we're right in the heart of the city, but it's like a village, really. But it's in the city centre, bottom part of the jewellery quarter. Jewellery quarter bigger than Hatton Garden, 500 jewellery shops. One of the other districts, you've got the sports district where Birmingham City Football Club is, and you've got the jewellery quarter, you've got the tech quarter as well. So this is the bottom of the jewellery quarter. Beautiful area, and we've got off plan, but delivering in about 2-3 months' time. We've got show flats there. Yes, these are artist impression, but we've got show flats up and running in real pictures and bits and bobs for anyone to see. 20% deposit required. Average rental yields, we've seen a bit more than that, but let's say 6.5%. Ready end of Q1 2026. And again, 5% further to pay on completion, 75% mortgage. We can go through the maths at a later date. Super development, boutique, only 56 apartments. And we've got some quite famous people that are living there, you know, in and around Birmingham. We've got homeowners as well as investors, which is always nice to have that mix in a development. Next slide, please, Han. We've got Derby. Derby's fantastic. It's like a mini Birmingham, 3.5 billion of investment. 46% of graduates are staying in Derby for work. Average property price 200,000. We've got stuff from 150, right in the heart of the city centre. Walk to the shopping mall, which is the 15th biggest shopping mall in the UK. 2-minute walk the other way, and you're at the National Rail Station. Rolls-Royce, 10,000 jobs. That's the aero engine. Bombardier making the trains. Toyota manufacturing. So again, all the fundamentals, regeneration, excuse me, transportation links, jobs. In all our developments, we got, what do we say, 2,500 apartments sold and delivered. There's not one person said, why isn't my apartment rented? Whatever it is, we rent them literally within about a week or so, depending on how many we're releasing from a development at a time. And we stagger that so we don't flood the market. So we stagger delivery. So again, you don't have to worry about voids, and you don't have to worry about getting these high rental yields. What have we got next, Han? Okay, so yeah, Loom House, this is the Derby one, starting from 148. I think we might have sold those, so might be starting at 150 now, but again, similar price. 20% deposit required. Again, completing soon. We've got show flats, video, so again, you're not having to wait too long there. Right in the heart of the city. Everything we do, white goods, flooring, comes with everything. So you're ready to rock and roll. Some markets are furnished, some are unfurnished, but again, we'll advise on that. If you don't need to buy a furniture pack, that can save you £2,000, £3,000 or £4,000. Again, that's what we're here to help you through. Next slide, Han. Again, we've got Leeds commuter belt. We've got sort of Bingley. Again, we're a lot cheaper because we're just outside of the city centre core, but a direct train into Leeds. And we've got, again, all the jobs there, all the universities, all the creation, and this high predicted price growth and capital appreciation as well. Next slide. So we've got a development there called the housing, which is suitable for short-term lets, and we can explain what that is and help you manage the shorter-term lets, which can be a lot more profitable. 24 minutes from Leeds, 16 minutes from Bradford. Very super development, massive apartments. They're sort of twice the size of the average one bed in the UK. And we've got a lot of facilities here. The developer, funnily enough, is a build to rent developer. So everything, they've built 1,100 units in the past. They've kept them all themselves. We convinced them to not for us to sell it to you, to the individual investors. And we've got golf simulators. There's a serviced office there so people can work from home. We've got cafe. We've got the little river running through it there. We've got a cinema, six-seater cinema, media room, meeting rooms that can be booked. I think there's gyms, concierge. There's 32 facilities and services there. So that's gone down really well from that sort of serviced accommodation, short-term let point of view because of the location and because of the facilities. And yeah, starting from 164, that one's ready end of this year. Next slide, Han.
I'll give you a little break, Andrew.
Yeah, thanks.
No, thank you so much. Some really, really good information there, obviously, on all of the different areas and obviously just the UK market as a whole. Those three that Andrew's just been through are just three of our developments. We've got many, many more across these key areas in the UK. So on screen here, we've got a handful of those other projects. So we've got the Point here. This is another fantastic development by Secon. So that's the same development as the Halcyon. Majority of those facilities that Andrew has just mentioned, they are also within the Point as well. So it just gives it that sort of real kind of high-end luxury hotel style of living. And again here, that is suitable for serviced accommodation. So it goes down really well when you've kind of got that gym on site, you've got a co-working space, cinema room. Again, it just kind of makes it really, really popular, whether it's short term or longer term lets. We've got Charles Green residences. So there's one bed left here, start at 235. There's a few two beds left here as well. And again, here we've seen the show apartment. The spec is fantastic, really, really nice finish. These are nearing completion. They're going to kind of be around Q2, perhaps sort of Q3 this year. So not too long away, but again, it gives you that little bit of time if you need it with financing and mortgages. And then finally on screen, as well as obviously the Halcyon that Andrew's just been through, we've got the paper yard. So the quite nice thing is with the paper yard, it's an off-plan development. So we've said here Q4, again, that might sort of slightly creep into Q1 27. So if you're looking for something that you can kind of just put your deposit down on and watch the capital grow over the next kind of 12 months without having to sort of sort mortgages and whatnot straight away, paper yard is perfect. So there's a really good mix across all of our developments of completion dates, deposits, overall pricing. So there should sort of be something there to suit everyone. So next here, we've just sort of got what it takes to be a Joseph Mews client. So obviously we want to work with as many of you as possible. But what we've sort of obviously just popped on here is you want to be, actively seeking UK portfolio growth, open to that sort of expert-led investment guidance. We are here to get the most for you out of your investment. So for some, that is a different answer to others. Some it does work better to buy something that they're going to get immediate rental return. Others, it works better to part with 20% and not have to put the remaining 5% down, not have to get your mortgage in play. You're kind of going to need access to, we've said around 50,000. It's probably a bit less than that, to be honest. That's kind of edging on the side of caution with that 50,000, but that's including things like, deposit, stamp duty, solicitor fees. And Andrew sort of said earlier about having that long-term growth focused mindset. You know, it isn't necessarily a market where you're going to make your millions in 6 months' time, 12 months' time. So if you have got that mindset that you are in this for the longer haul, at least 5 years, then there's definitely some really, really good money to be made. And then again, sort of motivated, clear investment goals and strategy. But again, that's what we're here for. You know, you don't need to have it all worked out. You don't need to know everything, because anything that you need, any guidance or advice that you need, we are here to see you through the whole journey. Little special offer here for attendees of our webinar. Obviously, we kind of can track who's attended the webinar. So anybody who is on this evening that goes on to purchase with us, and this does apply also to anybody that has already reserved this week, you'll have £1,000 towards your legal fees. Andrew's looking at me there. You'll have a
Yeah.
£1,000 towards your legal fees or furniture pack, whatever's kind of going to work best for you. So that's just like a nice little sweetener for you for attending the webinar as well.
I can see some questions, so thanks for those. We'll cover those
Yeah,
in a
yeah, I was
second.
just about to say what I'll do is I'm going to pop on to the next slide just so we can start the Q&A. But I'm just going to launch a poll on screen as well before Andrew starts the Q&A. So what you can do here is just select whether you want to book a consultation with myself, with Andrew, or another member of the team. We will try and keep it to us if we can, just as obviously you've sort of met with us virtually. Whether you want mortgage advice, tax advice, anything at all, just select on the poll that I'm just launching now, and then we will be in touch with all of you tomorrow to get that moving for you.
Cool. Thanks for that, Han. Really good. And I know we've touched on it, but everything's done in house, like with exchanges and working with you, working with the developer. We're a one phone number, one email. You know, we have got lots of departments, but you're managed. And we tend to, with the different departments, we've with some clients like a WhatsApp group. So we set a WhatsApp group. So, you know, if you're going for mortgages, you know, we're all communicating. It's all about this day and age, particularly, it's communication, it's talking with one another, and it's, you know, we represent the developers. And we also want to look after our clients. We want to look after developers as well. So yeah, look, questions. Thanks for your questions. Thanks for waiting. I'll go through those. So Bupendra's got the first one. I'd like to understand the taxation on rental income. It might attract double taxation both in the UK and Ireland. No, we've got a taxation treaty for most companies, including Ireland. So you'll pay tax once in the UK, and again, depending on, you know, where you're living, Bhupender, and if you are earning money in the UK, it might be that you want to set it up as a limited company. You can claim back your interest, property, travel potentially, as long as you're traveling to see the property. And again, as if you're doing drawdowns, taking money out, it's a bit like having a business. You can take money out more tax efficiently or keep it in there. So again, tick one. If you tick one of the boxes, we'll know it's you, Bhupender. If you want to book a consultation, and we can always talk about that at a high level in your and with your circumstances, and then we can always get if we've got a specialist tax lady that if you've got more than 5 properties, she's good. We've got somebody else that's more, you know, if it's your first one. So again, we can help there. So hopefully that helps. Matt McKiernan, I own an apartment in Portugal with a £87,000 mortgage. Remaining value is 250. So the next question is, would it be possible to refinance? So yes, we have national, international mortgage brokers. So if you take that free mortgage consultation, we'll follow it up, speak with one of the guys or girls at one of the brokers that we've worked with for many decades, and they'll talk to you. No obligation, no fees, no charges. They'll have a call with you and discuss it just to see. So you don't have to feel committed. So any questions like that, tick the box, and then you'll get that free advice, and you'll know where you stand. I like this next one. Anonymous attendee. For transparency, how did Joseph Mews get paid? It's an interesting question. We partner with developers, so we get paid on successful delivery at the back end. So we'll joint venture with the developer. So we cover all the marketing costs, all the sales costs, all the customer care, the handover team, etc. So it's built in to the development, like any other developer. You're not paying extra to have us because we're a developer would have a customer care team, a handover team. It's just we do that for these big serious investors because we're good at that. They're good at building. We're good at all the warm customer care side of things. So we get paid a little bit upfront because we have big expenses running the company. We've got probably 25, 30 people in the company. We've got offices in Dubai, South Africa, and obviously Birmingham to support different clients in those regions. So yeah, I'm pleased to say we do get paid, but you're not paying it's not like a fee on top. It's all in with the build costs and everything else.
It's the same as if effectively, I suppose, as an estate agent, isn't it? You know, when a vendor is selling a property, the buyer doesn't pay the fee, the vendor pays the fee to the agent. The difference is obviously between us as an agent, as we said earlier, is we give so much more to not only the developer who is paying us that fee, we also give that service to you. I know a lot of people sort of say that when they buy through an estate agent, they manage to get the offer agreed and then they kind of never hear from the estate agent again. Everything then goes through solicitors. Whereas with us, it's the complete opposite to that. Again, as we said earlier, we see you through that whole journey.
Yeah, I think sort of morally and contractually, we're tied in with the developer. So we want to make it work for the developer because if it's off plan, he's had all the cost or she's had all the cost. You've only put down 20%. They're not getting the 80. In some cases, they don't get the 80% for maybe 15 months until completion. So that's one of the reasons why we work with you all the way through because the developer doesn't make his money, if we're honest. We don't make our money at the back end, but we still do that ongoing care afterwards as well. We don't want to leave the developer in the lurch. We don't want to leave you in the lurch. We've had people that, if it's off plan and it's a year away, things happen. You might lose your job. Let's look at worst case scenario. It can happen. So we can help resell that unit for you. So you put your 20% there. Where it's happened in the past, we've managed to resell that unit. Sometimes we've resold at a profit because, of course, the prices have gone up. We sold out, tend to sell it fairly quickly. Prices go up. So I don't encourage what I call flipping, buying to sell before completion because there's always a risk. But we've got very good, real human developers that understand you might have lost your job, who knows, people can pass away, all sorts of things. So, the developers we choose to work with and that want to work with us are really good. So we'll support you there as well. What expenses, anonymous, what expenses are allowable to be charged against taxable income? So yeah, interest, furnishing, travel, yeah, a few of the bits and bobs. But again, we've got a specialist company that charge a small monthly figure they'll set up a limited company for you. They do all that with you and for you. They're directly linked into HMRC. So it's all done automatically. Yes, some of you might be an accountant or want to do it yourself. Happy days. I don't. I just want to get on with a day job. So you can have a third party company that will do all that with you or for you. So again, nice and easy. But any of these things, if you want to rent it out yourself, if you want to furnish it yourself, happy days. If not, we're there to do as much or as little as you like. As I say, I've got clients that become friends I've known for decades, and they've not even been to England. They just know it's good for property investment. Could be the last question. Is the rental income taxable in the UK or Ireland? UK, HMRC, all taken and deducted here in the UK, and you're not paying it again, as I think Bhupinder was asking. You're only paying once. You're only paying once in the UK. I'm hoping that helps. I want to thank everyone. We've tried and keep it to half hour. We've done an hour and 4 minutes. That's probably Hannah's fault, so sorry about that. Yes, hopefully you've clicked the box and we'll be in touch. Any questions or queries, fill in the form. We'll track you down. We don't drive you mad with emails and bits and bobs, but we'll keep in touch. Anything you need, let us know. We're here to help.
Yeah, I can see that quite a few of you have booked some one-to-one meetings, so we'll definitely be
Lovely.
in touch with you all tomorrow, and look forward to speaking to you all directly then.
Yeah, we'll try and make it depending on the numbers because we had a really good number on today. So we'll try and keep it with myself and Hannah as you've kind of met us. If it happens to be someone else, don't worry. Or if you particularly want Hannah or myself, happy to oblige. And yeah, just want to say thank you very much and thanks, Han. Good presentation, enjoyed that, and speak to everyone soon. I hope.
Thank you, guys. Good night. Thanks so
Take
much.
care.